The battle to win a Bitcoin ETF approval in the United States is heating up. Fidelity Investments privately meeting with the SEC officials last week to approve its Bitcoin ETF, according to recent filings, citing increased investor interest in crypto and similar funds worldwide. Asset manager Bitwise also joining the battle to win Bitcoin ETF approval in the U.S., customizing their filing to include Bitcoin futures in line with signals from SEC Chair Gary Gensler on Tuesday. And joining us now to discuss is Matt Hougan, Chief Investment Officer of Bitwise Investments. Welcome to the show, Matt.
Thanks for having me.
All right, so you filed recently this Bitwise Bitcoin Strategy ETF with the SEC on Tuesday. Bitwise teaming up with ETF Series Solutions in its bid to get a U.S. Bitcoin ETF over the finish line. Tell me a bit about this product.
Sure. I'm so limited in what I can say about this product because of the quiet period, but I can talk about a Bitcoin futures ETF in general. Investors have been wanting exposure to Bitcoin and crypto through an ETF structure for a long time. And people have been working on it since 2013 when the Winklevoss twins filed the first application for a Bitcoin ETF. There's now at least some signals from the SEC that they're interested in reviewing futures-based ETFs, and that's why you've seen a large number of companies, including Bitwise, file for this exposure. Generally speaking, all the funds will use Bitcoin futures and maybe other products to attempt to capture some of the returns of the Bitcoin market. It will be an exciting new tool in an investor's toolbox for gaining exposure to this market.
So Gary Gensler has indeed signaled that he's more interested in Bitcoin futures exposure related ETFs versus ETFs that are exposed to directly to Bitcoin on the spot markets. So I wonder, how optimistic are you that this might actually get through? Because so far, of course, in the United States, a Bitcoin ETF has not been approved.
Yeah, well, I think, as you know, many novel ETFs take many years to be approved. The first levered ETFs took over 6 years to be approved. The first non-transparent active ETFs took 10 years to approve. So just because it's taken a long time at Bitcoin doesn't mean that the road doesn't end eventually. And I do think we're getting much closer. I don't know.
How soon?
Oh, that's a hard one. Hard to put me down. I think there's a reasonable chance you could see the approvals this year. The first filing would go effective sometime in mid-October. And whether that gets delayed or not, I'm not sure. But I do think we're on or close to the finish line on a Bitcoin futures ETF.
Are you speaking to regulators to get sort of a sense?
Most of my read of this has come from public statements, the same statements that you're looking at. Bitwise has met with the SEC many times to talk about the crypto markets in general and Bitcoin ETFs specifically over the last year. But I'm reading the same public comments you are. And I'm also reflecting the fact that this market is simply more institutional today than it was before. The CME Bitcoin futures is a large, robust market with institutional investors operating in that market. The liquidity of that market has improved significantly. So even from an outsider's perspective, looking in on the Bitcoin market, it looks a lot more institutional today than it did in 2017. And I think that augurs well for approval, although, of course, you never know what's going to happen.
All right, and I'm wondering about the first mover advantage here, because in Canada we did see with Purpose Investments, when they launched their Bitcoin ETF, they saw explosive volume and it kind of dwindled from the second and third iterations of ETFs there. So do you think that, I don't know if you have any hints as whether the SEC may approve ETFs, if they do, in a chunk or one by one?
I don't know. I don't know. Obviously, they should approve ours first. No, I'm just joking there. Yeah, I think there's a lot of debate on whether it should be one by one or they should batch all the issuers and have them go to market. I will say, usually in the ETF industry, first mover matters a great deal, and it's hard to overcome that. I think crypto may be a little bit different, and here's why. The primary user of a Bitcoin ETF is going to be a financial advisor. And it's one thing to buy that ETF, but it's another thing to hold it for a long period of time and answer the questions that your clients have about the crypto market. What does this new regulatory development mean for my ETF holding? I think you're going to see over time advisors favor firms that have in-depth research that can help them answer the questions that clients have. So maybe that's more important here than it is in a more familiar market like equities or traditional commodities. I think advisors want that support.
Nevertheless, there are several Bitcoin ETFs awaiting approval. Van Eck is the latest one that they'll have it expire if they don't get approval in November. Any chance of any of those or not? Because the VanEck one is, of course, exposure is to the Bitcoin spot market.
It's so hard to keep track of these because there are two different roads that are going here. You have the futures-based road, where the first sort of approval deadline is mid-October, and you have the physical or spot Bitcoin ETF, which is the VanEck one you mentioned. I think the indications from the SEC's public statements is they're particularly excited about reviewing the futures-based ETFs. I personally think the market is ready to support both. But I don't get to make those decisions. The folks in Washington do.
And last question, I just want to slip in there. You also have an XBitcoin fund counting exposure to every coin except or a bunch of coins that are not Bitcoin.
Yeah.
Tell me a bit about this, but again, it is only offered privately.
That's right. Last week we launched the Bitwise 10 XBitcoin Crypto Index Fund. There is huge demand for it. One of the biggest stories in crypto over the last year is that professional investors who first went into crypto in 2020 by buying Bitcoin are now looking at what's happening on Ethereum, in DeFi, in NFTs, and they want exposure to that too. So this fund starts with Ethereum and holds the next 8 largest assets for a portfolio. That's Cardano, it's Solana, it's DeFi assets. It makes it easy to gain exposure to everything else beyond Bitcoin. And yeah, we've been surprised by the amount of demand.